Okay, so let's take a look at this, Calvin, okay? So here in the example you sent me, the overall direction of the market is bullish in this instance, okay? Making higher highs, higher lows, what have you. This is the new high in this instance, as you've mentioned.
Yes.
Now, price pulls back. You said that price has been making a higher low and pushing bullish again. Now, at this stage, we only know that price is making a higher low and pushing bullish because it's happened.
Yes.
But if we didn't have that information there, the question really is in this situation, is this a higher low or is this a shift in direction? And the only way you're going to determine that is by having strict rules that define a continuation in this instance, that if you define this as a higher low and price breaks it, then the real question is this still in an uptrend and is this still a higher low? And the very difficult thing about this is you don't know until it happens. So you must define what a higher low is and what is a break of that higher low to potentially indicate a reversal. Because some traders might see this area as a higher low and a break of that higher low, and they will see this now as a new push phase with a lower high and a potential for price to make a new lower low.
Okay.
But you got to define that. Now, you're only going to be able to define it through your interpretation. There is no set rules. And the only way you're going to get that information is by trading your concept religiously and consistently until you have enough experience and data to be able to define what that looks like. Otherwise, you'll continuously play the guessing game and you will assume that this one day will be the higher low and it's broken. So now it's a downtrend. And when it goes back up, you would have said to yourself, oh no, this is still in an uptrend because it hasn't broken the higher low. So this has to be refined and defined. If you fail to do that, you're always going to be changing your bias with the market.
Okay, Rob, second, yeah.
Right, let's continue. So let's assume this is the higher low. Price continues bullish to make a new higher high. Now we see price in this instance, which is very clear, not much to be defined here. Price is failing to break these highs, indicating a potential reversal, or indicating that the bulls are losing control of the market and the bears are stepping in. Now, if the bulls are going to continue, this does not mean that they have failed or the bears have necessarily stepped in until, based on what I can see you're doing, this higher low has been broken. If price breaks this higher low, then this invalidates the uptrend that you have identified and now initiates a potential shift in the market's direction to being potentially a new downtrend and or the end of this uptrend, and then the market needs to decide what it needs to do. In this instance, you can see that price has broken the higher low. We've failed to break above, indicating a failure to continue bullish, so a lack of bullish sentiment. We see that the bearish sentiment has now kicked back into the market, indicating that bearish sentiment, and now we have our first wave of a potential bearish continuation with a lower high, and if price continues bearish, a potential lower low. Now, in this instance, we are focused on sells only because the uptrend has been invalidated, the bears are in the market, and at this moment in time, we have a lower high that did not make a lower low. However, we now have price coming back to that lower high and respecting it, potentially indicating a double top to then continue bearish. All we're doing when we're analyzing the markets is we're identifying the behavior and the sentiment. And with the way you're approaching the market, because you trade a single time frame only, you're also looking at the trend and structure. Based on the trend and structure, this is a sellable opportunity because the sentiment of the market is bearish, the structure of the market is bearish, and this information here with price failing to break the high indicates to us that the bulls are losing control and the bears are stepping in. So we technically, in theory, not guaranteed, should go down, just as we've had price failing to break these highs and price went down. So at this point, this is a sellable opportunity regardless of the result. Anyway, this being the lower high, the sentiment being bearish, we can see price did not break the low on 2 occasions. In actual fact, we entered a consolidation, meaning there's no directional bias. Price did not break the high and or the low. So now we're waiting for a true directional bias again, or for a new sentiment and behavior to step into the market. Price then breaks above this at some point. We now have a bullish sentiment. And with this bullish sentiment, what we're looking for is a continuation of that bullish sentiment. We're simply looking for price to create a breakout of that consolidation to initiate that bullish sentiment. And in your instance, you're looking for price to make a higher low to create that initial uptrend. And then given the opportunity, if it breaks the high, we are looking for a buy-in opportunity. Now, what happened? Price broke out of the consolidation. We see that price has pulled back to make a higher low. We can see that in this instance, price is failing to break these structural highs. However, we had a break. This high here, which is the new high, is higher than this point. So whether this looks clean or not, we are still showing signs of a bullish sentiment, especially when price breaks out of this consolidation area. Remember the same theory. If price breaks out of this consolidation, we're technically looking for buys, and it did go up. If price breaks out of this consolidation, technically we're looking for sells, which it didn't. Here, we enter another consolidation where price has been moving sideways, and we broke out of the highs. So in this instance, we expect the market to continue bullish. However, in this instance, price broke out of this consolidation after a long time. It broke back into this consolidation, and then it broke back below this consolidation. Now, however you want to look at this, you can call this a false breakout, a stop hunt, whatever it may be, okay? But the truth of the matter is when you're focusing on behavior in the market, this is a breakout and a break back into the consolidation. The behavior then does not resemble a bullish or buy sentiment. It's neutral until, again, it breaks out of the consolidation, which is this information here. Once it breaks out of the consolidation to the downside, especially for the simple fact that it broke out of the consolidation to the upside and did not continue bullish, but rather broke back in and then broke out to the downside, the sentiment now has shifted to being bearish. With that being said, is this a good buying opportunity based on everything that we've said previously, based on market structure, market sentiment, market behavior? The answer is no. This is not a buying opportunity you should have took. Based on the simplicity of price action and what price action does on a daily basis, this is an opportunity where you should have identified that the consolidation was broken out of. It failed to maintain that bullish sentiment. The bears broke this market back into the consolidation where there's no directional bias. And then we have a strong bearish candle close below the consolidation, continuing to validate the previous behavior, indicating a bearish sentiment and potentially a continuation, not guaranteed, but a potential continuation to the downside. This is a trade you should have never took. Based on this information, what you should have done is wait for an opportunity for price to come back and retest the consolidation to look for a continuation down, and or look for an opportunity where you can see that price has broken out, created this bearish pin bar, bearish engulfing candle, sorry, not bearish pin bar, a pin bar, bearish engulfing candle, whatever you use, and then use this as an opportunity to place your trade. The reason why you would put your stop loss here, entry after being given these signals, is because price is broken out. If price is broken out, in theory, it must go down. Not guaranteed, but in theory, and this is your edge. You have your stop loss back above the high in the consolidation so that if price does break back into the consolidation, guess what? You wasn't wrong, but you are out of the trade at the right time because in theory, once it's broken out, it shouldn't come back in. Just like this scenario. Once it broke out, it shouldn't come back in. It can, but you are accepting with every trade you take a consistent process that it shouldn't come back in. So if you take the trade here, entry here, put your stop loss here, and entry here, and price comes back in, this wasn't a premature stop loss. This wasn't a stop loss that was in the wrong place. This was a stop loss that was back in the consolidation. And if it turns back against you, then it just is what it is. The same with the scenario here. Stop loss above, entry here in anticipation of price to continue down. Now, from what I can see from your notes, it says you ended up taking this trade as a buying opportunity and the directional bias needs to be defined by the market, which from what I can see here, you took the buy when in theory, from your notes, you've identified that this was more sell bias than it was buy bias, maybe with a few more things that I've been able to highlight. So you understand that there is both bullish and bearish. So you have to wait for the market to show you a clear directional bias, which is everything that I've just said. And you just got to make sure that when you come to the charts, you are not just jumping on the charts in the hope to take a trade because you want to, need to, have to feel like, the trade needs to be taken. You need to be making sure that there is a beginning, middle, and end to your analysis. You understand the sentiment and the bias of the market. You understand the behavior and the structure of the market. And until it is crystal clear to you where it is going, not guaranteed it will go there, but crystal clear where it is going, then don't take the trade. And if you continue to read the markets the way I've just illustrated, and you continue to practice this on a daily basis, you're intentional with every trade that you take, and you are focusing on being deliberate and laser focused on the setups that make 100% sense, not 99% sense, 100% sense, then I can promise you, you won't be confused. You won't be questioning whether the trade was a good idea or not. You'll be taking those trades with conviction and confidence, and you'll start to have a lot more clarity in your pre-analysis, your entries, and your management of your trades. And obviously, that's just going to lead to consistent and profitable results. Does this make sense?
Yes, Rox, interesting. Yes. Can I show you the trade which I actually took after this?
You want to show me another trade?
No, the same trade where what I actually ended up taking once I understood I did a mistake.
Yeah, share it with me. So we can see this is where we left off.
Yes.
Price broke out. After breaking out, it broke back into the consolidation, as we mentioned. You can see price is now respecting the high that it failed to continue. We had a major reaction. We break out again. After we break out the consolidation, this is an opportunity to sell. We have a very nice bearish engulfing candle to the downside. This is obviously indicating to us strong bearish momentum, a bearish sentiment, and the chances of the market continuing bearish after this bearish close is pretty high. Okay. Anyway, you allowed the market to push down. And what you're doing in a situation like this, in theory, is you're allowing the market to show its hand that it has now truly gone from that uptrend that we just analyzed to that downtrend. You patiently wait for the market to pull back, which is a natural development of price action to create what we call a lower high. And then after creating that lower high, you obviously look for the initial shift in your direction. This looks very convincing. This looks like you took this trade with confidence and conviction because you saw the lower high. You didn't wait for the break of the low. You saw that it created that downtrend structure, already created that lower low. Now this is potentially the lower high. We don't need to guarantee itself to us, but as long as we know the direction of the market and what we're looking for, which is that lower high, this could be it. You saw the momentum shift, you entered with confidence and conviction, you took the trade and you were rewarded. So this, my friend, is a perfect pick to trade. And what this shows me is that you understand what you're doing. I just think in this instance, there was just a little bit of confusion maybe with the structure of the market. I don't know, you might have had a long day at work or you were coming off the back of a loss. It doesn't matter. The point is you recognized it, Calvin.
Yes.
You came for advice. You obviously saw that yourself because you put those notes on the trade that you sent me for review, and you didn't jump back in because of FOMO, because it broke back in. You didn't rush the sales. You said to yourself, I'm going to wait, let the market show its hand. And guess what? that patience, that confidence, conviction, that understanding of the market direction and the sentiment paid off pretty well. And I know you're capable of trading like this all of the time. You just got to believe in yourself more. You got to just have more confidence in yourself. And you're going to gain that through execution and reviewing your trades and making sure that you are being intentional with every trade you're taking. And then there's nothing going to hold you back, Calvin. Nothing.
Yeah. Okay. Thank you, Rubs.
You're
Thank you,
welcome,
Skip.
my brother. You're welcome.